Hello, I'm Nina Warhurst and this is Breaking the Mould with our investment director, Russ Mould. Hello Russ, how are we?
Hello Nina, I'm very well. How are you? Lovely to see you. Thank you for helping out.
Not at all. So I've been looking forward to asking this.
Big question.
What is the fuss, Russ?
Okay, well we're right in the middle of a packed trading update season right now. There's lots going on. The markets are still worrying, thinking about why did the Swiss National Bank abandon the peg? Why has it let the franc go through the roof? But even allowing for that, I think the fuss is going to be caused by, among the big caps, full year results from Royal Dutch Shell. Among the small caps, results from Renew Holdings, which is an engineering services company. And then just to top it all off, we've got the next monetary policy announcement from the US Federal Reserve. So
let's start with Royal Dutch Shell.
Yes.
In the news a lot because the price of oil has been slipping, hasn't it, over the past few months?
Slipping? You're being polite. It's gone from over $100 a barrel to about 45, and yet that has got Shell absolutely in its sights at the moment, and it's taken Shell's share price with it, as the chart behind us shows. Again, fairly clear correlation between the two. So the question now is, what can the company do about it, if anything, or what are the shareholders looking for? And we're going to find out on Thursday the 29th, when Chief Executive Ben van Beurden announces full year fourth quarter results. Now, he's been in charge for about a year, and he got off to a really fast start last year. Perfect package for keeping the market happy, interestingly. He came straight in and said, Shell, big company, not very efficient, so I'm going to cut capital spending, I'm going to cut costs, I'm going to sell assets, I'm going to increase the dividend. Magic little combination, and investors will be looking for an update on all four of those points when we come up not only for this year, but for 2015 particularly. So there'll be a progress update, and then what he's going to do is the next step to combat the weaker oil price. Okay,
and when that happens, what are the headline numbers we should be looking for?
Well, there's lots of them. I mean, in terms of the capital spending, for the last year, the plan was to cut from $46 billion to $37 billion. So that's point number one. Then it's, will it go lower again? In terms of disposals, we got to $11.6 billion at the third quarter stage. So how far has he got? Did he get to 15? And are there more coming? And the dividend was up 4% at the third quarter stage. That's probably about where it'll be for the full year. That's around $1.88, because Shell pays its dividends in dollars. So that equates to around 122 pence, enough for a yield of about 5.5%, which is why a lot of AJ Bell customers own the stock in the first place. Now, of greater importance will be any forecasts he gives for this year. Now, for earnings, the consensus is for a 17% drop because of the oil price, down to around 190p.
Okay, let's move on then. Let's switch from a £135 billion oil giant to £175 million AIM quoted company.
Yeah, AIM quoted Renew. It's based between Leeds and York. It's quite dear to my heart in that respect. And it provides vital maintenance services in areas like water, energy, nuclear, rail. So they've all got fairly captive customer bases, because you have to keep all of those assets perfectly maintained, and there are long-term contracts, so there's quite good visibility to the business. Yeah. Now, through canny disposals and cheaply made acquisitions, Chief Executive Brian May, not
the guitarist,
no, and Chairman Roy Harrison have completely reshaped the firm to focus on these areas, and the markets love the results, because share price is the opposite of Shell's. On a 5-year view, it kind of just does that. So it's the firm's annual general meeting on Wednesday the 28th, and Harrison's going to provide probably a trading update on the first quarter. He certainly did last year, so it's a fair bet he will do this. Now, at the full year stage, the order backlog or order book was £439 million. The company was busy making a disposal, busy making a couple of acquisitions, so we'll get an update on how all that's going. And the key really is the progress towards the board's two key financial targets: £500 million of sales and a 4.5% operating profit within 3 years. Now, they're already at 465 and 3.5%, so well on the way, but let's see what progress they talk about.
Let's keep our eyes on the northern companies.
The northern companies, yes.
A long way away, last but certainly not least, the American Central Bank, the Federal Reserve.
Yeah, no northern influence here, I'm afraid to say. We've got their first policy announcement of the year, Wednesday the 28th, after the close in the UK, probably about 9 o'clock at night, our time. And to be honest, there's not likely to be an awful lot of change. Interest rates will be left at 0.25%. QE will be left unchanged, there'll be no additions. So the really important thing will be, will there be any hints of a change in policy for the future? Yeah. Everybody's waiting to see if the Fed's going to raise interest rates or not. I'm personally not completely convinced, mainly because the US government's debts are still so enormous, it will want to see an increase in its borrowing costs. But I think what you've got to do is look at the language in the Fed statement to see if there are any hints. If it does start to say, yeah, we might raise rates a bit quicker than you all think, and the market's looking for maybe the second half of the year, then markets might get a bit worried. Because if you look at the Fed since it stopped adding to the programme in October, Dollar's gone up, Swiss francs collapsed, oil prices collapsed, equity markets have really been volatile. So people will be pouring through the statement, even if the headline will be no change.
Russ, thank you very much.
Absolute pleasure. Thank you, Nina.
And thank you for watching. Do join us next time.